Good morning. You're watching Business World Live here on One News. I'm Jess De Los Santos. It's the start of a new trading day, but first, let's go straight to our top story. The devastation caused by Typhoon Odette may dampen the country's economic recovery story, according to economists. In particular, agriculture and productivity losses are seen to significantly impact fourth quarter GDP growth. Officials in Surigao del Norte said the province may have suffered up to 20 billion pesos in damages, while an initial assessment by the Department of Agriculture showed that damage to crops in western Visayas and the Caraga regions is estimated at 127 million pesos. Recall that prior to Odette's onslaught last week, economic managers raised their growth forecast for 2021 to 5 to 5.5% from an earlier goal of 4 to 5%. NEDA Chief Carl Chua says they're still waiting for full impact or assessment report from concerned agencies, and the government is currently prioritizing immediate relief operations to mitigate the impact of the typhoon. Odette is the strongest typhoon to hit the country this year. So far, more than 90 people have been reported dead by the NDRRMC. But this figure is seen to rise as disaster agencies continue to assess the aftermath caused by the typhoon. The finance department earlier said that extreme weather events have translated to 506.1 billion pesos in losses and damage to the Philippines over the past decade. Meanwhile, the country's top 1,000 corporations saw their combined gross revenue decline for the first time in 2020. This as the economy grappled with the effects of the COVID-19 pandemic. The aggregate gross revenue of the top 1,000 firms amounted to nearly 10.8 trillion pesos. That's 13% lower than the 12.3 trillion pesos earned by the same roster of firms in 2019. Meanwhile, their combined net income dropped by almost 40% from about 1.5 trillion pesos. This contraction in gross revenue reflected the decline in economic output amid the onset of the COVID pandemic that prompted business closures and below capacity operations. The Business World Top 1,000 corporations in the Philippines ranks private and public stock entities based on gross revenue. All right, not a good start to the trading day here amid, of course, that onslaught caused by Typhoon Odette. We're starting the day on a low note here. They have local shares down close to 0.9%. That would, if that continues until the end of the session, that's going to snap a two-day winning streak here for the local bourse, which inch closer to the 7,300 level on Friday. Again, shares today starting Monday at 7,231. Again, uncertainty brought about by the recent calamity might in fact hamper full bounce back here for local shares in the next 2 weeks, at least according to Trade Asia. They expect some knee-jerk reaction from Typhoon Odette, especially as it battered the Visayas and Mindanao area. Another looming threat, of course, the Omicron variant. That's despite the health department saying that 7 close contacts of the 2 index cases already tested negative for the virus. Now, Luis Liblingan of Regina Capital says the severity of Omicron cases will determine if sentiment would be spilling over, but says that range-wise, now the Philippines remains in a better position. Let's have a quick check how that is at least affecting specific stocks here today. As you can see, again, decliners beating advancers so far at the start of Monday's session here. SM Prime leading declines are down by more than 2%, close to 2.1% really. ICTSI likewise ending the day in the negative here, down at 1.9%. SM Investments also shedding points here, down 1.8%. That's despite them bearing that they are seeking SEC approval for the sale of 10 billion pesos worth of fixed retail bonds with an oversubscription option of as much as 5 billion pesos. That will also form part of a 30 billion peso debt securities program. Likewise, we're also looking, however, on the upside, the number of gainers here. Pure Gold up 1.4%. Ayala Land also increasing by more than 8%. Now, also another news here outside the main wars. Let's talk about Philippine Airlines. Well, their reorganization plan just got a go signal from U.S. courts here. That's going to open the door for the carrier to exit bankruptcy. That's going to slash $2 billion in debt and revive its fortunes after international travel took a beating due to the pandemic. Now, U.S. bankruptcy judge Shelley Chapman said that she would okay the Chapter 11 plan after unsecured creditors favored the proposal. With overwhelming consensus, the carrier is expected to emerge before the end of 2021. That's after completing a few more steps. Recall that Philippine Airlines already was given access to $505 million worth of equity and debt financing to meet its obligations. The company said the plan also gives them $2 billion in permanent balance sheet reductions from existing creditors and gives room for the carrier to consensually contract fleet capacity by as much as 25%. Again, of course, while shares still suspended, but let's see how that, of course, is going to affect the rest of our travel stocks as we go on the trading day. Here are other headlines we're keeping our eyes on. The Banco Central sees businesses ramping up expansion and hiring more workers as the economy continues to reopen. The Philippine Star reports that the fourth quarter 2021 business expectations survey showed that employment outlook index climbed to 24.5% for the first quarter of 2022 as compared to the previous quarter's 6.2%. For the next 12 months, employment outlook index is also higher at 32.4% from 24.3%. Meanwhile, over 23% of the respondents also expressed interest in beefing up operations for the first quarter of 2022. But for the next 12 months, percentage of companies with expansion plans declined slightly to about 27%. BSP Senior Director Redentor Alegre said the business confidence index turned sharply higher in the fourth quarter at almost 40%. This is the highest level since the onset of the COVID-19 pandemic. Alegre said respondents attributed the higher outlook to the stronger than expected GDP growth in the quarter, easing of COVID restrictions, and continuing vaccine rollout, among others. Now, regions on the track of Typhoon Odette may be subject to a price freeze order covering key agricultural products following extensive damage to farms there. Now, Agriculture Assistant Secretary Christine Evangelista said the final decision will be made as more information comes in on the extent of the storm damage to food producing areas. The DA's initial assessment of damage to crops in the western Visayas and the Caraga region amounted to 127 million pesos. But that's still expected to increase as more reports come in. The agency has yet to make a statement on the anticipated impact of the typhoon on agricultural growth targets. With with a huge trail of destruction, just how much is Typhoon Odette going to hamper the country's recovery? Let's get insights on that and more from June Neri, Chief Economist over at BPI. Good afternoon, good morning, Sir June. Thank you for joining us here at Business World Live.
Good day, Jess, and good day to your viewers.
All right, so again, Odette's aftermath, nothing less than devastating. How is this going to cloud recovery prospects as we head into the last 2 weeks of the year?
Well, remember this time last year, we also had heavy typhoons and flooding, although most of it were in the north, in Metro Manila, and of course in the Cagayan area, Cagayan Valley area. Um, this time around, it appears to have affected a bigger geography. But looking at the numbers, our sense is there is no need for the government to go back to their original 4 to 5% target. It looks like at the very least we will still meet the low end of 5% just as we are already well into December, and more likely than not, the strong momentum of Metro Manila and other areas of the country are enough to bring us up to 5%. However, we're a little bit concerned about inflation.
Like what you mentioned, inflation is going to be a concern. How much should that at least cause an uptick in inflation?
Well, if I may share
Go ahead.
a chart, Jess, here you see the monthly inflation rates, month on month changes in CPI. And the November print, although the headline number year on year was lower at 4.2%, you will see from the chart that November was actually the second biggest month on month increase in prices. And that's because we're already in the Christmas season. Now, with this challenge in supply arising from Odette, we will probably not be able to see a sub 4% print for the year on year anytime soon, Jess, no?
Mhm.
Because, the freezers were not working for several days. That means that meat supply be very much short, no? Compared to the increasing demand because of the holidays. No? So inflation will remain elevated, unfortunately, although growth will probably still be on track, at least at the low end of the government target. Construction activity to reconstruct, to rebuild the damage in the region will probably boost construction again in the first quarter of 2022, Jess, as the economy sees the election-related spending and the construction related to build. Students going out, Jess, to school again. For some schools, second semester will be partly
Mhm.
face-to-face. This will mean more transport demand and also higher prices of transport fares. No?
Mhm. Okay, like you mentioned, you expect at least inflation to still remain elevated. For how long should we expect that to remain at that range, especially as an aftermath of Typhoon Odette?
Yes, well, December will probably be still close to 4% because of base
Mhm.
effects, but it might stay above the BSP target. So that will be the 17th month already of inflation being being higher than the policy rate, and almost a year for above the target. No? We
Mhm.
should be seeing the anniversary of the inflation breach around February.
Mhm.
So unfortunately, we will probably miss the target
Mhm.
for
But
another quarter, no, at least. And then by the second quarter, because of other factors, we will still probably stay above 4%. Yes.
all right, so what action then should we expect from the central bank?
No action is expected because it will be the first 5 months of an election year, and in the last three
Mhm.
elections, we never saw a rate hike from the Banco Central during these first 5 months of a presidential election year. So don't
Mhm.
expect it to happen this time around either. However, by June, when the elections are over, you can see actually more hikes. In fact, because we're so late in the game, we might see more aggressive hikes in the second half.
Okay, now earlier you mentioned that we're still likely to hit at least the lower end of the government's target at 5%. Do I take it to mean your year-end forecast is at least at 5%, or do you have a different projection here? And how did we compare in 2021? How did we fare rather compared to our neighbors in ASEAN?
Well, at plus 5.1, say that's the final number, Jess. That's much lower than the 9.6 contraction for the whole of 2020, and tells you that our recovery is only partial, whereas
Mhm.
some countries like Vietnam, uh, uh, most other ASEAN are going to be back to 2019 output, if not by the end of this year,
Mhm.
first quarter of 2022. Whereas in our case, at the rate we're going with Odette, looks like middle of the year, third quarter is our full recovery for 2019 output.
Mm. So by then, do you expect at least the Philippines to be out of the woods? That's in a way the mark that we can finally say that we are out of the woods now.
Well, we're only back to 2019. If that's your benchmark, then we're out of the woods in that respect. But if your goal is to be able to return to our original GDP trajectory pre-pandemic,
Mhm.
We're still way off track, Jess.
Mhm.
And
Should
yes, go ahead.
go ahead, go ahead.
And
Sh- Go
the
ahead, Sir.
yeah, the landscape for industries will be much different. No? The leaders and the laggards will be transformed, no? Because of this uh, tech acceleration of digital, and there will be
Mhm.
sectors that people will permanently avoid, no?
Mhm.
Like many of these face-to-face services will not be able to return to 100%, although they will be the stronger sectors in the next few quarters. Return to 100% is going to take even longer because people have changed their habits. We don't. Not everyone wants to go back to movie houses just yet.
Mhm. Mhm.
Concerts and similar activities.
Mhm.
They've learned the delivery system works for them, so it will be a much transformed economy, Jess.
Now, there's one other thing that we haven't talked about yet. Should we be worried about the detection of Omicron cases here in the Philippines? Is that at least in a way a threat to recovery?
Well, so far, the numbers are still quite low. I think everybody knows that it was bound to get here at some point. So again, the way to manage it is to continue the vaccinations because we haven't reached 50% or herd immunity yet. If we can bring it up to that level, many of not all, the vaccines are able to apparently protect against Omicron, but that will increase the probability of managing this new variant, Jess. No? And while we do see some impact on growth, there is at this point no need to make any big revisions for
Mhm.
5% this year and even as much as 7% growth next year, Jess.
Okay, now, of course, over last week, we also had the Senate finally approving the Public Service Act. Should we be putting much hope on that one?
Well, there's still a lot of details that have to be worked on, Jess,
Mhm.
but the general idea is actually positive, especially for foreign direct investments, no? Because everybody knows that the Philippines is one of the most restrictive countries in terms of foreign ownership, not only in the ASEAN region, but the entire Asian region, which is why part of the reason why our FDIs are one of the lowest in this, even after the pandemic. No? Whether pre-pandemic or after the pandemic, our FDIs have lagged the region. And part of the reason is we're not allowing enough foreign investors, no, to own to have certain amount of ownership in key sectors of the economy. So with the PSA, it should help, generally speaking, but we have to work out on the rules to ensure that we avoid some of the side effects of opening our ownership to foreigners.
Okay, the intention is good, especially at a time when the economy is trying to recover, but still, of course, the devil is in the details. Thank you very much for your time this morning. June Neri, Chief Economist over at BPI. Thank you, sir, and stay safe.
Thank you.
And that's a first look into the business day this Monday, December 20, 2021. Catch Business World Live for the market close at 3:15 p.m. today. I'm Jess De Los Santos, and we are One News. Mask on, wash hands, and stay safe, Philippines.